Hi, this is Mike Maloney, and I'm doing a bit of a celebration right now because last Sunday I finished typing my book, which has been many years. And since March, I've been working on this 70 to 80 hours per week, with the exception of the days that I produce a video. Those days I don't work on the book much or at all. But other than that, it's every day between 10 and 14 hours, sometimes 16 hours of working on this book. It's finally done, but that's since March was this big push to get it over the line. It's actually many years of research and writing. You're going to be surprised when you see it, I think. There's no place where you can get as big a picture of what is going on with the economy and with precious metals in one place. It's very condensed, all the different factors. And after writing this for so long, I am just amazed that gold and silver are still so incredibly cheap right now. I continue to accumulate now and then whenever prices pull back. But I want to show you this chart here is from Jeff's most recent article. Great article. Please go and read it. And by the way, if you want to know when my book is coming out, it should be in just a few weeks. But if you want to know exactly when, go to goldsilver.com, sign up for the free newsletter, and you'll get a notification when it's available to pre-order on Amazon. So anyway, Jeff just did an article on the performance of all the different asset categories and gold and silver. And what you see here is the US dollar index has been going up. People say the dollar is going up. That is wrong. The dollar is not going up. That would mean if the dollar was going up, prices would be going down. Right now, prices are going up. We've got something called inflation. Inflation is the value of the dollar going down. It doesn't buy as much stuff. So the dollar is falling. It is going down. It's just not falling as fast as the other currencies it's being measured against. And so what you see here is the change, and the dollar is up 17.2%. Now, when Brent Johnson came out with his dollar milkshake theory, I immediately said, this is correct. The dollar is going to gain. And I also said when it started approaching 103 that if it breaks 103 decisively, that's in technical analysis, that was a previous peak and it was a resistance area. If it breaks that significantly, then we're headed to 120. We already got from 103 to 115. So it's gone most of the way there. It will probably continue. When it starts going up, you'll see gold and silver do little pullbacks here, but they are showing surprising resilience in the face of a rising dollar. And so to me, this is just the last chances to accumulate gold and silver at just what I consider, after putting together this book, these are insanely low prices. And I believe that, I wasn't sure if gold and silver were really being manipulated. I knew they were in the short term, but in the long term, price suppression, I wasn't absolutely positive, but it just really seems like right now it's being held down. So there are some big positions being taken in gold right now. And it's in the billions. It's in my book. You'll see it. But when the dollar is going up, that means that gold is not falling in other currencies around the world. It's the British pound is right near the all-time highs. Same thing for the Japanese yen. There's quite a number of currencies where gold is about to do a breakout. And what you see here, commodities have done well. Inflation, 6.2%. I guess that's averaging the entire year because we've been up at around 9% lately. Crude oil, and then gold, -8. Silver, -17.6. The dollar is up 17.2. So these things sort of make sense. But look at where the NASDAQ is. If you're invested in tech stocks, you're probably down by about a third right now. Real estate, almost a third. These are some really heavy-duty numbers here. The S&P 500 down a quarter, and the Dow down 1/5, 20%, 21%. So gold and silver are this insurance asset that is working out. Even the 10-year Treasury year to date is down 11%. So that's much more so than gold. So I want to move on and show you some cycles going on here. And this is weekly transparent holdings of gold. And so this is for transparent means published data that can be collected. And so this is for repositories, mutual funds, and ETFs. And the number of ounces is the blue line. The price of gold is over here on the right, and that's the gold line. So the blue line, it scales on the left. But what's most important here to me is you can see these waves and cycles of inflows, outflows, inflows, outflows, inflows, outflows, a lot of inflows during the pandemic, and then outflows, inflows, outflows, inflows, and then the longest single stretch of outflows in this whole chart. And they're big outflows. It combined, it's the most. And it might continue. If the dollar goes up more, this will continue. I want to be on the buying end of this, not on the selling. I want to accumulate at one of these lows. I don't want to be selling at a high, So it's good. If you were accumulating in this area, you're accumulating at a low before the big explosion. So you accumulate before the big explosion. And so that's what I have been doing, or at least trying to do. So here is silver. Same story, but a little bit choppier. Silver always is, but it's got these waves and cycles and enormous outflows, except for this 1 week here. And you can see the resilience that silver has had here in the face. The price is the silver line, in the face of the dollar rising against other currencies, because people aren't really thinking this through. Is the dollar really going up? The answer is no. That would mean prices are going down, not up. And so the dollar is definitely going down. Now, this great chart, by the way, go to goldsilver.com, sign up for the newsletter. You'll get the information of when my book is going to be available for pre-order on Amazon and when it's going to be released. Should be soon. It's sent off to the printer right now. And so we're just, we've been waiting on paper. And there's only so many of them, and there are supply chain disruptions. And the black and white, this one's full color all the way through. The black and white edition, which will be far less expensive, won't be out until March. That's the disruptions in the supply. So this is from Grady BPC. It's also Grady-Commodities TA plus cycles. And what you see here is he's created a symmetry move for silver, and he shows that it should outperform the NDX by a factor of 30. This is huge. Now, I believe that what you're going to see when the dollar finishes rising, now if the dollar breaks 120 significantly, we're on our way to 160. This could hold gold and silver down measured in US dollars for a while, but it'll be setting record prices around the rest of the world. However, I don't see this going on until 2032, 2033. It's possible, but I don't think it's going to be that much of a symmetrical move. I think what's going to happen is eventually there will be a crisis. Once the dollar peaks and starts to fall, the suppression that we have seen from the rising dollar on US dollar denominated gold and silver prices will cause a sudden slingshot move, and gold and silver will just shoot for the moon very suddenly because of the stored up energy of this idiotic floating currency exchange system that is a complete accident, a leftover from when the Bretton Woods system disintegrated. So what I noticed when I was looking at this, though, is this only goes back to here's 1986. The end of 85 is what it goes back to. So I wanted to take it back further. I went to stock charts where this chart was made, and this is what I could generate with the same amount of headroom. But going back to 1970, the NDX, the NASDAQ 100, stops in 1985. And so I decided I was going to substitute the S&P 500 instead of the NDX to take it back further. But notice the size of this bump in the middle for this W-shaped bottom. If you have that symmetry move up here, it's going to be a big W, a double bottom or a W pattern, which is a very, very bullish pattern. And so I went back a little further, and this takes it back to 1970 or 71 when gold became freely traded. And by the way, this is the gold chart. Why did I do that? Well, I wanted to see this bump in the middle here be about the same size, and it's even smaller because of this peak being so high. So what does the silver chart tell us? Whoa, the silver chart, this really compresses this W bottom, and you can see how incredibly undervalued this is. And when you go up to the peak divided by where we are now means that if we get back up to that peak in a symmetry move, which would put this out toward 2035 or something like that, but still, you would be able to buy 86 times more stock. You sell a share of stock today, it's a share of the spiders, the S&P 500 ETF. You invest in silver. When silver peaks, you should be able to buy 86 shares, 86 times gains in true wealth, in value. That's something I call Wealth Cycles, which is another forthcoming book. But it's a huge move. It's just that I expect a dollar crisis to speed this whole thing up. And so I'm sort of done with this, but I do want everybody go to goldsilver.com, sign up for the newsletter so that you can be notified when my book comes out. There's going to be more videos about this. But I want to leave you with the great Thomas Sowell. I believe that he is the greatest living economist that there is, period. And he says many of today's problems are the result of yesterday's solutions, to which I would add, when it comes to economics and the monetary system, most of today's problems are the result of yesterday's solution. I want to thank you for watching. We'll see you next time.